All right. So, looking into the first chapter here of management accounting, let's get a strong understanding about these topics. So, we will constantly connect it back to the textbook and finish this topic simultaneously, bringing both the Excel file and the textbook on the screen here. So, let's look into this. First, here, the topic that we're looking into is the chapter title, and the chapter title is Accounting for Management. So this is the chapter that we're starting as the first chapter. Slowly now moving on. We're looking into management, cost, and financial accounting, all the three accountings. So we have the simplified version here and then the textbook version here. So first we'll start with management accounting. Management accounting is basically information for the bosses inside the company to plan and decide. Right? In simple words, if I tell you what really is management accounting, it's like the boss inside the company. He wants to plan and decide. So he needs an information about the management, right? That what it's basically mainly it's for the internal managers. Management accounting is mainly for the internal management, and it's future focused. That is where it becomes different from financial accounting, and what it basically helps with decisions and helps with controlling all the employees. And this is it basically uses cost accounting data. Management accounting majorly uses cost accounting data. It helps with decisions and controlling. It is the future focused and internal managers only. Mainly it's used by internal managers, and it's mainly information for the boss inside the company to plan and decide. So mainly it is used by bosses inside the company to plan and decide. So that is mainly about management accounting. It provides information for managers for planning, controlling, and decision making. Okay, it's internal use only. It focuses on future decision. It's used for cost accounting. It uses cost accounting information. Now coming to cost accounting basically tracks how much each product, service, or department cost. It tracks how much each product, service, or department costs. What are the key points? Firstly, who key points here is it finds the product or service cost. Whatever product you make, whatever service you make, what is the cost of that? Whatever product you make, service you make, what is the cost of that? Then why? It checks if the resources are wasted. The main thing is it checks if the resources are wasted. Second, the goal is to improve efficiency. What is the goal? The goal is to improve efficiency. And finally, the note is the base of management accounting, right? It's the cost accounting is the base of management accounting. What is cost accounting? It's the base of management accounting. It is the foundation of management accounting. Next, we look into financial accounting. What is financial accounting? It basically records all the money transaction and makes reports for people outside. It records all the money transaction and makes reports for people outside. Mainly for who does it make the reports? Mainly for external users like investors, banks, government, and shareholders. And the main important thing about here is that it must follows all the accounting laws and standard, and the focus is past and historical. The focus is past and historical, whereas in management accounting the focus is on the future. In financial accounting the focus is past and historical. Okay. And who it mainly mean for external users, whereas management accounting is for internal users only. Financial accounting is for external users. And along with that, financial accounting must follow all the laws and regulation, whereas in management accounting there is no such requirement, that you can make it as in whichever format you want, however you want, because it's for internal use, it's not for external use. When something is for internal use, you can keep it however. When something is for external use, then laws and regulations will come in place. Okay, so that is the difference between management, cost, and financial accounting. We can just go through this, we'll get the differences. So you'll understood. It provides information for planning, controlling, and decision making to the management for internal use only. Next, it records and analyzes the cost of product, service, activities, and departments. It records and analyzes the cost of everything, of the product, of the service, of the activity of the department, how much it is costing. And finally, we have financial accounting. What is financial accounting? It basically records the financial transaction and prepares financial statements for external users. It records financial transaction and prepares financial statements for external users, whereas management accounting is for internal users. And cost accounting is the basis for management accounting. Okay, it calculates the product and service, evaluates how much resource you're using, it helps improve your efficiency and forms the foundation of management accounting. So this is how the differences between cost accounting, management accounting, and financial accounting are. Okay, that's the first thing here. We've looked into some differences between the three and got a good clarity of what are the differences. Moving on now into data and information. So data, if you think about, is raw facts. Information is processed data. Data is raw facts, information is processed data. So when you process the data, it becomes information. So data, when you process it, becomes information. Data, when you process it, becomes information. Example of data are sales invoices, quantity sold, and employee hours. Sales invoices, quantity sold, and employee hours. That is data. Monthly sales report showing trends and profit. Monthly sales report showing trends and profit. That is an example of information. So whenever there are raw facts, that is just data. Whenever the raw facts are processed, that becomes information. Okay, data is processed into information. Unnecessary details are removed and replaced with useful summaries. Okay, any processed data is information. Okay, processed data is information. Process data is information. Okay. What is process data? Process data is information. What is process data? Process data is information. That is all about this. That what is process data? Process data is information. Process data is information. What is process data? Process data is information. Process data is information. Next, we look into cost accounting or management accounting in one bracket versus financial accounting. Cost accounting, management accounting, or and versus financial accounting. How is it different? The difference is mainly cost and management accounting is for internal managers, financial accounting is for external use. The purpose is planning, controls, and decision. That is the purpose. Here, financial reporting is the purpose. Here, the focus is future and the present. Here, the mainly is past performance is the focus. There is no fixed format in management accounting. You can make it however you want. Here, you have to follow the accounting standards. Here, it's very detailed. Here, it's a summarized information. It is prepared whenever you need. Here, there's a fixed periodicity, either annually or quarterly. There's a fixed periodicity within which you have to use this. You have to prepare this. Next, we have the attributes of good information. So first we understood what is data. From data, we understood what is information. Now from information, we are understanding what is good information. From data, now we are understanding what is good information. From data, now we are understanding what is good information. So now let's look into good information. So we will look into ACCURATE. This is the acronym. And if you remember this, you will know this is the acronym for good information. Okay, this is the acronym for good information. What is this? This is the acronym for good information. What is this? This is the acronym for good information. ACCURATE. This is the acronym for good information. So let's look into this. How do we make sense of the acronym here? The acronym for good information. Let's make sense of this. So A is for accurate. Your information should be accurate and precise. C is for complete. Your information includes all the relevant information, but not any unnecessary details. Next, C is cost effective. The benefits of information should exceed its cost. Cost effective. U is understandable. It's easy to read with minimal technical jargon. R is relevant. Only information useful for the decision should be included. A is authoritative. It comes from reliable and trusted sources. And then T is that your information should be timely, that is available when decisions need to be made, that whenever decisions need to be made on that time the information is available. Older the information, it becomes less useful. Easy to use, and it becomes it's presented in a user friendly format, then anyone can use that. You get it whenever you need it. That the source is credible, relevant. Only information that is useful for decision making should be included. It's easy to read with minimal technical jargon. The benefit for information should exceed the cost. It should be cost effective. It includes all the relevant information but not any unnecessary details. And then information should be correct and precise. Firstly, information should be correct and precise. Second, information should include all the relevant information but not any unnecessary details. Cost effective. The benefit of information should exceed the cost. Understandable. It's easy to read with minimal technical jargon. Relevant. Only information useful for decision making should be included. Authoritative. It comes from reliable and trusted sources. Timely. It's available when decisions need to be made. It is timely when it's available when decisions need to be made. And then easy to use. It should be presented in a user friendly format. It should be presented in a user friendly format. So firstly, we understood it is accurate. Information should be correct and precise. Second, it's complete. It includes all relevant information but not any unnecessary details. Cost effective. Benefit should be greater than the cost. Understandable. It's easy to read with minimal technical jargon. Relevant. Only information useful for decision making should be included. Authoritative. The credit source should be credible from where it's coming, and timely. Whenever you need it, you should get it that time, and it should not be old. It should be as current as it can. Easy to use. It should be presented in a user-friendly format. In a user-friendly format. So this is the mnemonic of accurate, and this is the characteristics of good information. So first we understood data, then we understood information. Now we understood good information. Okay, then we understood the difference between management and financial accounting. We understood the difference between data and information. Understood the high-level difference between management, cost accounting, and financial accounting. Now, next topic we look into is mission statement. Good information is done. Characteristics of good information is done. Now we are looking into what is mission statement. Mission statement is a written statement describing the overall purpose and direction of the business. Right? It tells us the overall purpose and the direction of the business. Overall purpose and the direction of the business. Right? It tells us about the overall purpose and direction of the business. The purpose is explain why the business exists. The purpose is basically explain why the business exists. And importance, it guides planning, objective, and business strategy. It helps you in planning. It helps you in setting objectives and business strategy. Right? A written line that says why the business exists and where it's going. A written line that says why the business exists and where it's going. A line that says why the business exists and where it's going. A written line that says why the business exists and where it's going. A line that says why the business exists and where it's going. A line that says why the business exists and where it's going. A line that says why the business exists and where it's going. A line that says why the business exists and where it's going. Okay? A written line that says why the business exists and where it's going. A line that says why the business exists and where it's going. A line that says why the business exists and where it's going. A line that says why the business exists and where it's going. A line that says why the business exists and where it's going. A line that says why the business exists and where it's going. A line that says why the business exists and where it's going. A line that says why the business exists and where it's going. A line that says why the business exists and where it's going. A line that says why the business exists and where it's going. A line that says why the business exists and where it's going. A line that says why the business exists and where it's going. A line that says why the business exists and where it's going. A line that says why Okay, why it exists, where it's going. So it's a written line that says why the business exists and where it's going. And describing the purpose and the objective, explain why the business exists, and it helps in guiding the planning, objective, and the business strategy. That is why the need is there. Next, we'll look into is the four elements. Okay. Next, we'll look into the four elements of mission statement. Firstly, purpose, who we serve and why we exist. Right. The purpose tells who we serve as a business and why we exist. Strategy, what we sell and how we do it. Strategy is how what we sell and how we do it. Policies and culture is how we behave at work. Values is the core beliefs we follow. Values is the core beliefs we follow. Policies and cultures, how we behave at work. Strategy, how we sell and how we do it. Purpose, how we serve and why we exist. Who we serve and why we exist. Then what we sell and how do we do it, how we behave at work, and the core beliefs we follow. That is our elements and the four elements that we've looked into and the meaning of each of those elements, right? This is the core beliefs, this is how we behave at work, what products and how we sell it, purposes, why does the business exist. Next, we look into characteristics of good mission statement. Like we saw characteristics of good information. Now we're looking into characteristics of good mission statement. So what are the characteristics of a good mission statement? Let's look into this. First one, it says the mission statement should be brief. It should not be more than a page. It should be as brief as a page, short, usually one page max. General, big picture direction, no detailed plans. It should just be big picture direction. It should not be any detailed plans. Next, it states the aims. It says why the company wants to, what the company wants to achieve. It states the aim of the company. Next, business scope. It says what the industry areas, says what industry areas the business works in. It says what industry areas the business works in, and what industry areas that the business works in. That is business scope. Next, open-ended. No exact numbers or targets. It's very flexible. No exact numbers, no exact targets. It's very flexible. Next, no profit focus. It doesn't directly say we want profit. Not time bound, no deadline. It's an ongoing process. Communication tool, it tells the employees and the outsiders what we as a company stand for, and guides objectives. It's the basis for setting goals, targets, and strategy. Once again, firstly, it should be brief, it should be short, general. It should give us big picture direction, not details. States the aim. It says what the company wants to achieve. Business scope, it says what industry or areas the business works in. Open-ended, no exact number, it's only targets. No exact number of targets, very flexible. No profit focus, it doesn't directly say we want profits. It's not time bound, there's no deadline, it's ongoing. Communication tool, it tells the employees and the outsiders what we stand for. It guides the objective. It's the basis for setting goals, targets, and strategy. It's the basis for setting goals, targets, and strategy. Okay, that's the thing here. Brief, it's short, usually one page. General, big picture direction, states the aim, what the company wants to achieve. Business scope says what direction areas the business works in. Sober ended, no exact numbers, no profit focus. It doesn't directly say we want profit. It's not time bound. It's a communication tool. It tells everyone what we stand for. It guides the objective. It's the basis for setting goals, basis for setting targets, basis for setting strategy. So that is your mission statement. Okay, here is a small summary of everything that we've looked into with regards to the mission. That what is the mission? It basically help individuals achieve education and career success by building through learning. So what really a mission does is that it gives us a base. Okay, what the mission does, it just gives us a strong base. Okay, it helps individual. Okay, UK Kaplan mission statement, right? Kaplan's UK mission statement is for Kaplan, right? The Kaplan, the books that we use. It's an example here. They help to achieve educational career success. Okay, this is Kaplan's. This is the textbook that we use. Their mission statement. Okay, then integrity is doing the right thing, being honest and ethical. Knowledge gives expert study material and teaching. Support gives students tools to help to pass. Opportunity make education available to more people, and result success students passing and achieving. So that is the result. Okay, that's just an example of the mission statement of Kaplan, right? They're not going to ask you the mission statement of Kaplan in the exam, but this is just an example of how mission statements really work. Next, we'll look into mission statement of Kaplan done here. Planning, decision making, and control. So let's look into that. First, we look into planning and the purpose of planning. Okay. So now we look into the topics of planning here. Okay, so looking into planning. What about planning? Planning is basically setting goals and deciding how to reach them. First, you set a goal and then you decide how to reach them. First, you set a goal and you decide how to reach them. Setting a goal and deciding how to reach them. Setting a goal and deciding how to reach them is called planning. Setting a goal and deciding how to reach them. Setting a goal and deciding how to reach them is planning. It uses past information to plan the future. You use the past information to plan the future. What you do is you set the past in, you use the past information and you plan the future. What is the purpose of planning? Guides managers to make future decisions. It guides your managers to make future decisions. It guides the managers to make future decisions. Guides managers in making future decisions. Next, we look into the SMART objectives. What about SMART? Let's look into SMART objectives. What about SMART? SMART basically stands for your objectives. Your objectives should be smart. So because see, you're setting objectives, so how should your objectives be? Your objectives should be smart, right? When you're planning, you first set an objective and then you decide how to meet that objective. You set an objective and then you decide how to meet that objective. That is called as smart. That's called as planning. In planning, first step is setting the objective. Under this objective, first is specific. Your objective should be clearly defined, no confusion. It should be measurable. You can track progress with numbers. Achievable, realistic with sources you have. It should be realistic with the sources you have. Relevant. It matches the business mission. Timed, has a deadline plus review the dates. It has a deadline plus review dates. First is specific, clearly defined, no confusion. Second, measurable, can track the process with numbers. Next, achievable, realistic with resources you have. Next, relevant, matches the business mission. Next, timed, has a deadline plus review dates. Has a deadline plus reviews dates. Right, you constantly keep reviewing it, have your deadline, but you review it. It should be relevant, matches the mission of the business, achievable, realistic with the sources you have, measurable, can track progress with numbers, and specific, clearly defined. No confusion, very clearly defined. There is no confusion, very clearly defined. Next, we look into levels of planning. There are three levels of planning. There are three levels of planning that we look into. What are the three levels of planning here? The three planning that we look into. First is strategic planning. It's long-term planning, medium-term planning, short-term planning. Okay, long-term planning, medium-term planning, short-term planning, long-term, medium-term, short-term, long-term planning, medium-term planning, short-term planning. Three levels of planning: long-term, medium-term, short-term, long-term, medium-term, short-term. There are three levels of planning. Who's responsible in long-term? Senior management. Who's like responsible in tactical planning? Senior and middle managers. Who's responsible in operational planning? All the managers. Okay, all the managers. So strategic planning, it's long term. Who's responsible? Senior management. It sets the overall business direction. What it does, it sets the overall business direction. Example, let's expand into international markets. Right, it sets the overall business direction. Who's responsible? Senior management. Time period, long term, 5+ years. Time period, long plus 5+years. Senior management sets the overall business direction, expands into international markets. Next, tactical planning. Medium term, around 1 year. Who's responsible? Senior and middle management. Purpose, converts the strategy into departmental plan. Convert strategy into departmental plan. Example, increasing marketing budget by 15%. Increasing the marketing budget by 15%. Next, we have operational planning. Short term, daily and weekly. Who's responsible? All the managers. It handles day-to-day activities. The purpose, it handles day-to-day activities. What is the example? Prepare daily production schedule. Prepare a daily production schedule. What is the example? Prepare a daily production schedule. So firstly, we understand strategic planning. It's long-term, 5+years. Senior management, and sets the overall direction of the business, expands into international markets. Tactical planning. It's medium-term. Senior and middle managers convert strategy into departmental plans. Increase marketing budget by 15%. So this is about tactical. It's medium term, around 1 year. Senior middle managers will look into it. It converts the strategy given by the strategic level into plans. And finally, it increases your marketing spend by 15%. Operational planning, it's short term, daily, weekly. All managers will be responsible for this. It handles day-to-day activities, prepare daily production schedules. It prepare daily production schedules, right? Prepare daily production schedules, right? Daily production schedules. These are like your just managers, right? You can just say you don't even have a senior level of managers. Just keep it more crisp as your managers, right? Your lowest, your initial level of managers, they are responsible for the operational planning. They are not senior, they are just managers, only managers. Handle day-to-day activities like preparing a daily schedule. This is about converting the strategy into departmental plans. And this is setting the overall business direction. So one is the highest level is strategic. Then we have, which is long-term, 5 years, tactical, which is around 1 year, operational, which is short-term. Okay, then who's responsible? Senior management, senior and middle manager, and then managers. It sets the overall business strategy, converts strategy into department plans, handles day-to-day activities. And that's here's the example. Expand into international market, increase marketing budget by 15%, prepare daily production schedule. That is the levels of planning. Prepare daily production schedule. Okay, there's strategic planning, tactical planning, operational planning, long term, medium term, short term. Senior management, senior and middle managers. Managers are responsible, sets the overall business direction, converts strategy into plan, handles day to day. Expand into international markets, increases marketing by 15%, prepares daily production schedule. So that is all about your levels of planning. That is all about your levels of planning. Next, we look into is the hierarchy. hierarchical law of hierarchy of planning. Okay, levels of planning is done. All the three. Now we look into is your decision making and control. Before that, we look into the hierarchy of planning. Okay, just adding another layer here. Hierarchy strategic. What does the business want to achieve? The focus of strategic is what does the business want to achieve? The focus of tactical is how will each department contribute? And operational, what needs to be done daily? What needs to be done on a daily basis? What needs to be done on a daily basis? Okay, what needs to be done on a daily basis? That is your operational. What does the business want to achieve? What does the business want to achieve? That is a strategic. How will each department contribute? That is tactical. Operational. What needs to be done today? What needs to be done today is operational. Tactical is how will each department contribute? Strategic. What does the business want to achieve? Next, we look into is decision making. What is decision making? Decision making basically is choosing the best option from the available. So whatever you have available, choose the best. Whatever you have available, choose the best. Whatever you have available, choose the best. That is definition. The requirement, you need reliable plus relevant information first. What do you need here? You need reliable and relevant information. What do you need? Reliable and relevant information. What do you need? Reliable and relevant information. That is requirement of the decision making, that to make a decision you need reliable and relevant information. So what is the process? First you plan, then you compare all the options, then you choose the best option, and then you control the results. First you plan, second you compare the options, third you choose the best option, fourth you control the results. First is you plan, second you compare the options, third you choose the best, and fourth you control the results. So this is the process, that first you plan that I have to do this, compare all the alternatives that are available, choose the best option for you, and then you are in the best position to control the results. Next, we're looking into is control. Now, exactly what do we mean by control? Control basically means, when you look into control, this basically means that comparing actual with planned and taking corrective action. You planned this, actual was this, what is the corrective action? You planned this, actual was this, what was the corrective action? Purpose, it ensures the objectives are achieved. What is the purpose? It ensures objectives are achieved. What is the purpose? It ensures the objectives are achieved. What is the purpose? It ensures the objectives are achieved. What is the purpose? It ensures the objectives are achieved. Okay, next we look into is feedback. It uses internal information to improve future decisions. What it does, it uses internal information to improve future decisions. What is the feedback? It uses internal information to improve future performance. So firstly, you compare actual with the plan. The purpose is to ensure that the objectives are achieved. Whatever objective you have, that is achieved. Feedback is use internal information to improve the future performance. They use internal information to improve your future decisions. And finally, outcome. Budgets and plans may be revised based on results, and your budgets may be revised and your plans may be revised based on the results. So feedback, you understood, internal information need to improve future decisions. Purpose, ensure objectives are met. Definition, comparing actual with plans and taking corrective action. Comparing actual with plans and taking corrective action. Purpose, ensure objectives are achieved. Feedback, internal information need to improve future decisions. Outcome, budgets and plans can be revised based on actual data. Based on actual data, budgets and plans can be revised. Based on actual data, budgets and plans can be revised. Internal information should improve the future decisions. Ensure objectives are achieved, and you compare the actual with the plan. Whatever you plan, just compare with the actual. Actually, what happened versus what you planned. हाँ, tell me. हाँ. हम्म. करेक्ट. तो फर्स्ट वाले में अगर आप देखो, तो जब भी आप कंपेयर करते हो, यू कंपेयर एक्चुअल विद प्लान्स एंड यू गेट अ वेरिएंस इन दैट वेरिएंस, व्हेन यू एनालाइज दैट वेरिएंस एंड यू आर एबल टू देन टेक द करेक्टिव एक्शन. So once you find the difference, after comparing, you get the difference. That difference is called variance. Then you do variance analysis. After analysis, you take the corrective action. Corrective action आएगा तब आपको पता चलेगा कि difference क्यों हुआ था. So first you will compare. On compare, you will find the difference. That difference is the variance. You'll analyze the variance. And जैसे ही variance को analyze किया, उससे पता चल जाएगा corrective action क्या है. Variance is the difference between the two. Compare actual and plan का जो difference है उसको variance बोलते हैं. A reporter of हाँ. नहीं, variance is the mistake. Corrective action is the correction that you do of the mistake. बस. Okay. Next we look into here is feedback loop. What do we mean by feedback loop? Firstly, it has certain steps here. When we look into the feedback loop, before we get into information systems, the feedback looks demonstrated. So here, first you set the objective and plan. So first you'll set the objective that, okay, I need to do this. Then you will implement the plan. Then you'll do it. Then you'll measure the actual performance with the objective that you had set initially. And then you will see what was the difference. Whenever there's a difference, you will find the difference and you will fix it. That's it. So first you set the objective that I have to finish MA in, let's say, 1 month. Then you will implement the plan and then you'll say, okay, it's been 1 month, I've not been able to finish. So you measure your actual performance with the plan and you realize, okay, this thing went slow. So what then you will do? You'll take corrective action, and then when you plan for FA, you will try to do it better. right? So that's how you go. You set the objective and then you make a plan, then you implement the plan, then you measure the actual performance with the plan, compare the two, you'll find the difference. That is called the variance. Analyze the variance, apply the correct action, and then you will update your future plans. For FA, you will plan better. So that is your feedback loop. Now, okay. Next, we'll look into is information systems. Now, what do we look into? Information system as different business levels. At different business levels, there are different information system. Now, okay. At different business level, there are different information system. So let's look into the information system. At strategic, the information that we needed is a more summarized information, right? Because we will make a long-term decision. So you need summarized long-term information. For tactical, for you need information for medium-term planning. So you need departmental information. Operational, you need detailed daily information for day-to-day operations. Okay. So information always flows upwards. Operational data supports the tactical decision. Tactical supports the strategic, right? So for tactical, you need strategic, you need summarized. S for strategic, S for summarized. For tactical, you need department-wise. Operational, you need detailed daily information. For departmental, you need daily information. For departmental, you need daily information. For tactical, you need departmental information. For operational, you need daily information. Strategic, you need summarized. S for strategic, S for summarized. Strategic, you need summarized information. Tactical, you need departmental reports and budgets. Operational, you need detailed daily information. You need detailed daily information. For operational, you need detailed daily information. For operational, you need detailed daily information. For strategic, you need summarized. For tactical, you need department reports and budget. For operational, you need detailed daily information. For operational, you need detailed daily information. So that is about this. Next, we look up role of management accounting information system. What is the role of the system here? The role of management accounting information system here. So let's look into this. So firstly, we'll look into, okay, first we'll look into information system at different business levels. Okay, at the strategic, we got that. This is done. Firstly, annual financial statements. The purpose is it helps in legal reporting. Annual financial statements help in legal reporting. Budgets and focus help in planning the future. Product profitability reports help to measure the product's profits. Cash flow reports monitor your cash availability. And investment appraisal evaluate the investment projects. And standard cost and variance report, it controls the cost. Government returns, it is meet the statutory requirements. So why do you need these reports for this? Why do you need financial statements for legal reporting? Why do you need budget and forecast for planning the future performance? Why do you need profitability to measure the product profits? Why do you need cash flow reports to monitor the cash availability? Why do you need investment appraisal reports to evaluate the projects, and which project should you invest in? Why do you need variance report? So that you can improve, you can control your cost better, and you can improve your performance in the future. Why do you need government returns? To meet the statutory requirements. Why do you need the government returns? To meet the statutory requirements. So annual financial statements you need for legal reporting, budget and forecast you need for planning future performance, product profitability to produce profit reports, cash flow reports to monitor the cash availability, investment reports to evaluate the investment project, standard and variance reports so that you can control your cost better in the future, government returns to meet the statutory requirements. So these are the reason why you need those reports. Next, types of management report. Next, let's look into type of management report. So there's two types of routine report, prepared regularly, ad hoc report, prepared for a specific purpose. One you do routine, every day you do it, right? A routine report is prepared regularly. Ad hoc, you just prepared on emergency basis, prepared for a specific purpose. It is prepared for a specific purpose. It is prepared for a specific purpose. Okay, limitations of management information. If it can give you inaccurate information is there, you can make a wrong decision. If untimely information, then it will become too late. If you're difficult to understand, manager may ignore complex reports. If there's a manager, they will ignore complex reports. Untimely information, decisions may be made too late. And inaccurate information, wrong decisions may be made. Inaccurate information, wrong decisions may be made. Untimely information, decision may be made too late and difficult to understand. Managers may ignore the complex reports. Managers may ignore the complex reports if it is difficult to understand. So these are certain limitations. Next, we'll look into relevant cost and revenues. Relevant cost and revenues. Firstly, only future costs are relevant. Which costs would you consider? Only future costs. Past costs are ignored. They are called sunk cost. Only future is relevant, past is ignored. Only incremental cost you consider. Additional cost caused by the decision, right? Any cost because of the decision. Any cost because of the decision. Any cost because of a decision. Incremental. And only focus on cash flow, not accounting profits. You only focus on cash flow, not accounting entries, not accounting profits. Relevant cost and revenue, you focus on cash flows. You only focus on incremental cost flows, and you only focus on future cash flows. Past costs are ignored. Past costs are ignored. Future cash flows you look into. Additional cost, incremental cash flows you look into. You focus on actual cash movements, not accounting entries. You focus on the actual cash movements. Your focus is on cash flow, not on profits, not on accounting entries. Yeah, okay, there are two types of information: financial, non-financial. Non-financial examples is customer satisfaction, product quality. Example of financial information, as we know, cost, revenue, and profit. There's nothing new about that. Next, external and internal information. External information is within the organization, outside the organization. Internal is within the organization. Next, importance of external information. So, what are the importance of external information here? Why do we need external information? Okay, firstly, government policies, what impact it has on business. It tells about tax changes and regulations, competitors, their impact on business, pricing and market strategy, customers, demand and preferences, economy, inflation, interest rates, weather, sales and production planning. So if we look into external information is also very important. Why is external information important? Because government policies, you should know why, because it impacts your tax changes and also the regulations. Competitors, you know the information because it helps your own pricing and strategy. You want to know about customers because that will help to know about the demand. You want to know about the economy because the inflation interest rate will affect the business. You want to know about the weather because sales and production planning will be affected, right? Sales and production planning will be affected. So knowing these external factors also very important. Why? Because it will impact the business, because government policy will affect the tax, competitors will affect your price, customers will affect the demand, economy will affect the inflation, weather will inflate the sales and production planning. So these external factors are equally very important to know about the impact on the business. Very important because they have an impact on the business, hence we need to know this.